Thank you so much for joining us today. I'm Marlon Bowling with you here on the Market Day Report. And I claim to be the tour guide to the ag commodities. Well, since I claim that, I better bring in our next tour guide. And we're also going to be talking with Brian Hoops. So together, we're going to take a look at the market makeup over the weekend as we get ready for a big week. And I say it's a big week because, Brian, there is the much anticipated Wheat Quality Council tour that gets underway. They're meeting in Manhattan, Kansas tonight, I believe. And then they set off out on the road tomorrow morning early, and they'll be canvassing all the fields in Kansas and surrounding areas for Tuesday, Wednesday, and early Thursday. We'll get the results Thursday night. And it seems like the market is finally waking up to the fact overnight here that, gosh, there may not be as much wheat out there as we had thought. Seems like there may have been some profit taking overnight. So as we look at our prices here, I'll go ahead and take a quick look at these quotes from bar chart. And I want to get your take on this, on why the markets did what they did. We came across the finish line this morning with July corn 5 3/4 higher at 5.92, but December only 2 higher, and it finished at 5.10 3/4 this morning. Soybean trade, well, you had the July contract up 14.5 at 14.04.5. November was 9 1/4 higher at 12.33, so you can tell there was some spread activity going on there. And in the wheat in Chicago, you had the July contract finishing 18 cents higher at 6.53. Now that's just a couple of ticks off of its high of the overnight trade. But then you get to Kansas City wheat. My goodness, July 27 1/4 higher at 9.04 1/4, a penny and a half from its high of the overnight session. Minneapolis wheat, you had that July contract up 21 cents at 8.67. And in the cotton market overnight, we'll take a look at July. It was up 165 at 82.18. December was up 153. But anyway, back on the wheat, you had Kansas City as the leader once again. I hear that the Black Sea shipping agreement talks have broken down again, and I would imagine that's also supportive to the wheat and maybe the corn. What do you think?
Yeah, Marlon, I think you're right. You know, there's a lot of things going on this morning. Crop progress will be out this afternoon. We expect to see pretty big jumps in both corn and soybean spring wheat planting. But yeah, Black Sea wheat region, the talks are not going very well. It doesn't look like there's going to be an agreement that's going to be extended. So that's producing a little bit of short covering. I think the trade is also nervous about this tour and what they're going to uncover. Remember, the rally kind of started a couple of weeks ago when Oklahoma's commission had their crop tour, and then that really set off some short covering. It's going on, continuing as these traders or field scouts, I should say, are going to be dispersing. And it kind of depends on what part of Kansas they're going to go to. If they go out in the western part of the state, they're going to find a crop that's virtually gone, torn up, and now that they've had some rain, they're going to plant other crops. If you get into that Wichita area, that's kind of the dividing line from east to west, north to south. You get out into the southeast part of the state, Wichita towards the Missouri border, they're going to find water standing in some of these fields because they've had a lot of rain here recently, and that crop is really going to benefit from it. And there's some really good crops in that southeastern part of Kansas. So it's not all a disaster, but there's going to be areas that certainly are. I think you're also looking at, a lot of short covering going on in here. The funds are still heavily short, especially Chicago wheat, buying a lot of those positions back. That's giving this rally in the wheat market. And really from a farmer standpoint, you look at what's happening in the wheat, what potentially could happen this summer, given corn and soybeans. USDA has dialed in record yields for both corn and soybean production in Friday's report. If we get any type of weather event or crop threatening weather to the crop, we're going to see big short covering in both corn and soybeans off of these lows that we're establishing right now.
In fact, speaking of soybeans, you were telling me when we came on the air here that there was a little news item here this morning that would be supporting them. And you might share that with our audience too.
Yeah, there was a sale of 100,000 metric tons of soybean meal to Poland this morning. So it's not probably a major market mover, but it does tell us that some of these countries are still looking for product. Meal is something that we don't export a tremendous amount of. We use a lot of it here domestically, but with Argentina out of the export market, we are going to see a little bit improvement in our soybean meal exports out into the world country.
All right, and I believe NOPA issues their crush report today as well, so that'll be interesting to see how that turned out here this past month. All right, we'll take a break right here, and then, Brian, we will examine our livestock trades here to start out the week right after this. Well, we're talking with Brian Hoops of Midwest Market Solutions right now. And Brian, on the cash cattle trade last week, it seemed like we just never did really get a whole lot of traction in the market. It was holding close to the level we had the week before, but generally what, maybe $1 or $2 under. But do you think that'll change this week or not?
I think it's going to be a positive change as well. Typically, when we have these cattle on feed report weeks, we see a little bit of strength in the cash markets. We have one on Friday. It looks to be kind of a friendly report with on feed and placement numbers down below year-ago levels once again. So it looks to be a constructive report. But really the key, and one of the things we watch very closely, is the weekly slaughter pace. We've said before, anytime we get in that 650 to 660,000 kill range, that's very bullish for the market because the packers usually need to buy up for the cattle to meet those kill levels. Last week's kill came in at a little bit of a surprise, 646,000 head, and we saw Friday's futures market rally. Kind of when we started to hear that news that the slaughter was going to be bigger, they put together a good Saturday kill. That's when the futures really took off and started to rally. So the market's trying to anticipate already bigger cash trade because of those kill levels. And we'll watch the slaughter pace this week once again. If we see another big kill week, we're going to look for some sizable jumps in the cash markets, probably a $1 to $2 jump this week.
Well, that's interesting. Okay, let's take a look at how we finished up last Friday on the livestock trade. Now, on our quotes provided by Bar Chart on live cattle, man, we had some strong gains all across the board. June was up $1.45. You had August up 165 at 162.45. On the feeders last Friday anyway, you had the August contract finishing $2.90 higher at 228.97. They really finished on a strong note. On the lean hogs, it was just narrowly mixed. June did eke out a little higher close, 22 cents higher at 84.10, but that seemed to be just kind of a meager attempt at any kind of a bounce off the bottom, Brian.
It's going to be, we had a little bearish news for the deferred hog futures last week. We've kind of absorbed that now. We're heavily discount already. So it's a disappointing market so far, but the cash really isn't showing much signs of rebounding. The index remains soft. It's going to be hard for these hog markets to find any real fundamental footing other than, it's starting to be grilling season, and hopefully that brings in a little bit better demand that could produce some short covering by the large technical traders.
Okay, well, thank you, Brian, for helping us navigate the start of the trading week here. We'll get off and underway here in about 6 minutes from right now. But thank you for the help. I appreciate it. We'll talk with you again here real soon. Brian Hoops of Midwest Market Solutions.